Assets are generally not held directly by the fund manager. In both PMS and AIF structures, securities and funds are typically held separately through custodians. Hi there. So, one of the biggest fears investors have before investing in a new PMS or an AIF is what happens if the fund manager shuts down or goes bankrupt? And honestly, it's a very valid question. Because unlike large established institutions, newer funds may not yet have long track records. And that itself is one of the biggest risks. A shorter operating history means there is less historical data to evaluate performance, risk management, and consistency across market cycles. So, when evaluating a newer fund, investors often look beyond just the scheme itself. They study the experience of the fund manager, their previous track record, investment philosophy, risk controls, and their operational setup. Now, here's the important part most investors don't realize. Client assets are generally not held directly by the fund manager. In both PMS and AIF structures, securities and funds are typically held separately through custodians. Fund manager usually only has a limited authority to give investment instructions to the custodian. The assets themselves continue to belong beneficially to the investor. Let me explain this. In PMS structures specifically, the securities are usually held directly in the client's own name. And in the AIF, typically they're structured as a trust. So there's a governance oversight and is generally handled through an independent third-party trustee structure. Now you may ask, does that eliminate all investment risk? Of course not. Market risk, strategic risk, liquidity risk, and execution risk is still existing. But operationally, these structures are designed to segregate investor assets from the business operations of the fund manager. Because in professional investing, understanding structure is just as important as understanding returns. Remember that. Thank you and see you soon.
Please note this content is intended purely for education and discussion purposes. It should not be considered as investment or tax advice. Please evaluate suitability and consult your respective financial and tax advisors before making any decisions.